And good morning and welcome to VSA Capital 5 Minute Morning Miner. It's Thursday, the 11th of May. Good morning, Paul. How are you?
Good morning, thank you. And just getting through that Microsoft update as usual, which comes on Wednesdays and Sundays.
Well, I give up with computers sometimes, but don't worry, we'll all have AI soon and we'll actually be able to sort it all out for us. We won't actually have to think at all. Fantastic. Anyway, now look, yesterday we said take your shorts off. And I don't mean literally the clothing. We said take your shorts off the lithium stocks because the lithium price was turning around and it looked like the stocks had done pretty much what we had predicted at the beginning of the year. And of course, overnight, basically, we've seen that was absolutely the right call. We've seen Alchem and Livent, if that's how you pronounce it, merge to make, I think it's about the world's third largest lithium operator, isn't it, Paul?
Well, it hasn't merged yet. That deal won't close until the end of the year, per the statement they put out yesterday. But it is going to be within the top five. There's no question about that. It would the merger of the two would result in a company with about 1.9 billion in revenue US and about 1.2 billion in EBITDA, and about 26% of the Alchem shareholders will own the combined, or 56% I should say, of Alchem shareholders will own the combined company, 44% going with Livent. So yeah, it will be a big elephant in the room for lithium production for sure.
No, I think what it is, I mean, people have got to wake up to the fact that something is really happening here in the transitional energy space, and there is a complete change in the outlook for some of these critical and battery metals. It's an area where generalist people just don't focus. They need to. It's also interesting, I speak to some of these American investment banks. They all claim they're experts in transitional energy. You know what? Not one of them are. And the reason is basically because they don't do the whole value chain. They don't look at the mining end. They just think because they understand solar and wind power, they must be experts in transitional energy. No, American bankers, you have got it wrong. You don't understand it. It's just that you're American and you think you do. Anyway, sorry, that was a bit of a rant. We better move on. Let's just talk about a client that we're really quite interested in at the moment, which I think you rather like because you saw them at 1-to-1, Paul, which is Millennial Potash.
Yes, what would you like to know?
Well, whatever you want to tell us.
Millennial Potash, TSX listing that didn't list that many months ago, really, but it's the same team that brought Millennial Lithium to great fruition for shareholders, and before that, Alana Potash before that. So it's a realm, the potash realm, and the salts, brine salts, or something, evaporite salts, or something management knows very well over the years. Millennial, this play on the TSX, Gabon is the license area. Coastal Gabon in Africa is where they have known resource to be present as evaporites in the subsurface. This year's drilling, where the camp is just being opened right now, will be to reconfirm the historic drilled mineralization and get new sample as well. It is very big. It will be most likely a in situ leach operation where you simply pump hot water down into the potash bearing units within the formation and dissolve the salts and pump them back up. So it's something that's already done across the world in Canada, the United States, and Russia. So it's not new technology, and it has a very low ESG impact. So it should come off very well for Millennial as they move the project along.
I love it, sort of pump and dump. Anyway, this is a management team that has a track record of getting taken over and creating shareholder value. So if you are happy on the TSX, buy Millennial Potash. Now let's move to another TSX stock actually, which we follow quite closely, which is Largo. They are one of the vanadium producer. They had Q1 financial results, didn't they, Paul?
Yes, they did. Vanadium producer in Brazil. Revenues were well up 35% on a year-on-year basis to 57.4 million, but so were their operating costs, up even more than that, at $46 million versus 29 million a year ago. And that translates to a vanadium pentoxide equivalent cost of $5.15 versus the former cost of just under $4 in Q1 of 2022. And that resulted in a slightly reduced net loss in the first quarter, but it's a little bit disappointing for me that there's any net loss at all, given the grade of the deposit that they have in Brazil, which is, as far as raw materials concerned, pretty much the best in the world. So why are they having a loss of 1.2 million this current quarter? Cash provided before working capital 8.2 million, which is up 42%, and total volume of vanadium pentoxide sold was 2,800 tons for a 28% increase. So I would like to see much better capital performance, I think, here, as I think most shareholders would.
Yeah, and we shouldn't forget that, of course, the reason we take an interest in vanadium pentoxide, vanadium electrolyte, is it all goes into vanadium flow batteries, where Invinity Energy Systems is the leading commercial vanadium flow battery in the world, and we think has a fantastic opportunity. Largo itself is obviously trying to break into the vanadium flow battery and the vanadium rental business with an ETF and Sprott. I would say struggling in that area slightly. Maybe just stick to mining vanadium and let these battery specialists do the battery part. My advice to you, Alberto, if you're listening. You know my number as well. Okay, finally, let's actually talk about one that actually really caught my eye, Paul, and goes a little bit back to what we were saying about lithium, but that is Andrada Metals now, as it was called Afritin. Changed its name because it's got a big lithium deposit in Namibia right next door to its tin assets. But they've appointed Barclays Bank as a corporate advisor to help discussions that are taking place on their lithium assets. What's your view there?
Yes, that's right. And they do have more than one lithium occurrence of significance there as far as property positions are concerned. Not only the tin production operation right now, which is in fact hosted within tantalum lithium pegmatite, but also two other properties in the not so distant vicinity to it in northwest Namibia. So it's been hiding there in the background the actual size and potential of the lithium resources that Andrada has, and now it's just a question of the marketplace. The market timing, I think, is right for them to get best value for shareholders on the way that they go about monetizing these assets, whether it's by joint venture or direct sale or just exactly how they will go about bringing these lithium resources, which as yet aren't at DFS stage otherwise, to fruition.
Well, again, Anthony, if you're listening, I may be giving Barclays Bank a call later on. So we'll just see. Watch this space, as they say. I think we'll call it a day there, Paul. Thanks. Got other things to do. We've done more than our 5 minutes. So we'll speak again tomorrow.
We'll see you then.